So thank you for coming, guys.
Thank you, Vuk, for having us.
Thank you, Vuk. Thank you and Sally for the opportunity as well. Glad to be here.
Before kick things off, I just want to announce that everybody who has joined actually can join near Balkan server, and we will help you with a hook. Hook is one of our partners, and everybody from Blocksquare community will be getting an NFT that is unique to Blocksquare. Just join near Balkan server, open a ticket, and we will set you up. You will be able to use it on Blocksquare server to get unique roles, and so on. So, what is Blocksquare? We can kick it off.
Sure. Sally, you probably want me to answer this one.
Of course. I mean, the question is probably to you, Denis.
So Blocksquare is, we started Blocksquare in 2018, and with a mission to facilitate transfer of real estate value on chain. So we found, let's say, a recipe of how you can transfer real estate value on chain. And our goal was, or is, to make it as simple as possible for any company in the real estate industry to be able to achieve this and kind of tap into Web3 without requiring hiring developers, building, custom solutions, and just be able to utilize something reliable and test it across the industry. And that's what Blocksquare basically is. It's an infrastructure that is facilitating the real estate industry to adopt Web3.
Okay, and why real estate on the blockchain in the first place?
Well, real estate is one of the largest asset classes there is, right? So there's a lot of value there. Now, Web3 is a new emerging market, and you have decentralized finance basically kind of being one of the pillars, let's say. If you look at traditional finance, it relies heavily on real estate. It's why it was able to grow so immensely. You get loans for buying homes to be able to finance real estate, etc. And the whole financial industry is kind of piggybacking on the value of real estate. So it kind of functioned one without the other. On the other hand side, we have this emerging market which is trying to create new value and is totally unable to utilize already present value. So we're here basically to help that be utilized within Web3 for it to grow in different verticals. One of them might be decentralized finance.
Okay.
And if I may also add, I mean, aside from what Denis mentioned, because to be honest, I'm bullish on real estate when it comes to tokenized real estate for many reasons, but one of them is because the current real estate structure today suffers from there's lack of liquidity and there's high transaction costs, and these are things that tokenized real estate can somehow find a solution for. And with the rapid growth of DeFi, the emergence of tokenized gold, the tokenized US dollar, I mean, and other real world assets, why not real estate as well? I mean, this is what I can say in these terms.
How does one go about digitizing a property in the first place? We have something physical. How do I tokenize it?
So, first of all, we need to understand what ownership of a physical property, like a real estate asset, is. Most of us understand the concept of owning your own home, right? So once you purchase a home, no matter how you finance it, the most simplest one might be, you just purchase the title. And once you own that title, that's registered somewhere. So the government kind of agrees, and the whole community, let's say, that you now own that piece of property. And ownership means you have a bundle of rights. That bundle of rights gives you the right to use it, to change it, to lease it, to sell it, so dispose of it, within the boundaries of law, of course. Now, in terms of tokenization, you currently, unfortunately, we still cannot tokenize the full bundle of those rights. And there's attempts tokenizing this with NFTs or with fungible tokens as well. But we specialize on the fungible token side. So fractionalizing the asset itself. We're focusing on the economic value of that asset, which means any revenues that the asset generates, as well as the asset appreciation and depreciation. And we're able to basically capture this through a corporate resolution that is signed by the owner, and through which those economic rights are transferred to whoever owns tokens in proportion to how many tokens they hold. So by our standard, we always enable the tokenization with 100,000 tokens maximum. And if you own 1,000 tokens, it means it gives you 1% of economic rights that derive from the ownership. So that's kind of the way of how you transfer real estate value on chain. And the beauty of it is it creates legally binding tokens, which means that I now have a right that I can exercise through legal means. And basically, I have a direct attachment to the asset and whoever is the owner of the full bundle of rights.
Are there some challenges in tokenizing real estate? For example, I live in Serbia, I may own a house. How do I actually tokenize it? What do you do?
There's a lot of challenges, of course.
Okay.
But you will see that the challenges are more than the can you do it? Here the answer is yes, you can tokenize your house. If that house is owned by a limited liability company, for instance, we can tokenize that house for you. Now, the question is, are you able to transfer those rights onto 10 other token holders through the sale of those tokens? That's another question, right? Because here it comes into offering an investment to others. And that's where certain regulation comes into place that is based on where you come from. So in Serbia, for instance, you will have certain limitations on who you can sell tokens to, or how you can sell them, or what the minimum ticket should be. But the beauty of how we tokenize real estate is that you're not tokenizing, for instance, shares of a company, but economic rights, which means that the regulation for this has yet to be really, really established, and it's nothing blocking you from doing it.
But Dennis, these are economic rights, right? Because I mean, when we speak of real estate asset tokenization, one of the very common words we hear of, it's either, I mean, it can be either a challenge or an advantage when they say composability, in the sense that the holders of these real estate tokens can actually redeem the legal rights to the title deed without having the approval of a third counterparty. In that case, you guys are offering the economic rights, but what about the rights to the actual title deed?
The rights to the actual title deed are very challenging, I would say, because there's many things that need to happen and before this can be actually achieved. Unfortunately, there's a way from here to what's going to be in the future, and I believe that title, once it gets digitized and once things are fully digitized, at that moment we'll be able to even consider this type of transfer, where the actual full bundle of rights is transferred to token holders. But we have, especially in in the Balkan region, we have cases, and let's leave tokenization aside, where this type of ownership is present. We have so many properties you won't believe, where there's hundreds of owners.
Okay.
They all have a fraction, right? And these are the worst ownership types ever.
Yeah.
There's people, why? Because there's these people that own or kind of inherited or came to own a piece of property are distributed across the world. There's no, they can't really, the court can't get a hold of them, can't reach them. So everything is blocked. Why? Because everybody needs to agree for certain things to happen with the transfer of that title or that property itself. So a lot of times these properties are hard to acquire by a fund, as well are hard to manage or totally deserted actually, and deteriorating. So the question is, do we want to use tokenization to achieve the same goal? Or maybe tokenization will be solving those issues because you now have an ability to communicate as well with all of those beneficiaries.
Okay, and have you heard of these A16Z licenses that they released? The Can't Be Evil licenses. They released them specifically for NFTs a few months ago, and it's basically a series of agreements where they let the creators grant NFT owners partial or near complete rights to NFT art. So I mean, so these people came up with this a few months ago. And I was wondering, I mean, isn't this somehow the start of something that can be taken into taken across from NFT art into real estate? Because I mean, they're working in that direction as well. It's somehow, it's again trying to for creators to connect the NFT to the holders of the NFTs. But in our case, we would be connecting the asset to the owners of this token also. I mean, do you think it's a move in the right direction, or is it just riding the hype at the moment?
Well, it's a question that I will need to follow up, because honestly, I'm not familiar exactly with the case that you pointed out.
Yeah.
But if we look from a general perspective, in terms of art, NFTs, and ownership, I think I'm not a lawyer, and I'm not an intellectual property lawyer, definitely. But I know that there's certain rights that are non-transferable. And if I buy an NFT, it doesn't mean I'm the owner of the full bundle of rights that derives from that NFT, because the creator is still the creator. He's the author of it. And I might maybe have the ownership, but it doesn't mean I can maybe reproduce that piece of art. Maybe that ownership is not mine. And so when we legally look at, the rights being transferred, this is quite complex. And the same thing kind of, I would say, happens when we come to the transfer of rights that derive from real estate ownership in the end.
Yeah.
Denis, what solutions does Blocksquare offer? I went to your website and I see there is Spring tokenization protocol. There are 3 white label solutions, Delta, Tide, and Wave. So what are these in the first place?
So
one by one.
Yeah. So if you imagine real estate tokenization, there's a life cycle to that process, right? Just like you tokenize real estate, you also kind of need to detokenize it as well. So there's a journey, right? And that journey needs to be supported by different products. And here, just not to go into specifics, is basically a product line supporting the whole life cycle, from issuance to token sale, to tradability, revenue distributions, buyback, and basically that's kind of closes the circle. Yeah.
Speaking about buybacks, does Blocksquare have their own token?
We do have our own token, and the Blocksquare token. And one of the things, because we're on this call, we're going to be porting BST to Near as well.
Cool.
And since we started Blocksquare, we always wanted to create, and it's not just a wish, but it's actually a requirement in my personal belief for this infrastructure to be fully owned by holders of BST tokens. So the smart contract system is composed out of 8 smart contracts, and throughout time, the governance to that whole protocol will go in the hands of basically BST holders. So that's kind of a process where we're, I would say, at the beginning of that journey, but we're already a step into decentralized governance with our governance board.
I was also reading about the buybacks, and like you're taking 1.5% from every transaction and buying back the tokens.
So yeah, so what we've created, if we said there needs to be an incentive mechanism within the system that creates incentive for those who operate marketplaces, to those who are kind of acting in a way as brokers or introducers to opportunities, to those who are the owners of the assets. So they need to also have an incentive, as well as the DAO, the Blocksquare DAO, basically receiving a portion. And the 1.5% fee that you mentioned is actually split into 3 parts, and it's a secondary market fee. And it's integrated basically in every property token that is issued. So whenever it changes hands from wallet to wallet, 1.5% of that token transfer in the asset token is deducted. And it's split to 3 beneficiaries. One is the partner that's operating the marketplace where this is happening. The other one is the owner of the asset, the real estate owner, the issuer. And number 3 is Blocksquare as a DAO.
And Denis, what do you think about real estate-backed stablecoins, or the concept of real estate-backed stablecoins? I mean, because this would actually present a nice use case for real estate. I mean, tokenized real estate.
Yeah, so this is we're basically building what we've discovered is that we want to solve liquidity, right? You mentioned, Sally, liquidity at the beginning of our talk, right? And liquidity is an issue that real estate is actually looking to solve through tokenization. On the other hand, we have regulation, which requires anyone purchasing a token requires KYC, which means it already creates limitations on liquidity, right?
Yeah.
And what we see is that real estate-backed stablecoins will be emerging, and maybe it's more like an index type of coin that not necessarily reflects the value of $1 all the time, but it might kind of fluctuate with the overall value of the underlying portfolio of properties. So in this way, the liquidity potential for that portfolio is increased drastically, because if you wrap it up under such token, you basically receive kind of a larger market cap token that has much more potential to find liquidity.
Yeah,
I see we have another.
Yeah, that's my friend. That's
nice.
My best friend, Blackie.
Oh, nice. Hey, Blackie. Yeah.
I have a question. BST is getting ported into NIR. So how does NIR come into play completely? So what is all of this about? Sally, do you want to take the word?
I mean, yeah, I mentioned previously, real estate tokenization is something that, I mean, especially when you combine real estate tokenization with DeFi, it's something that I'm bullish on for the future. Denis, they've been here since 2018, so they are, let's say, OGs in this sphere. Because not a lot of companies that started in 2018 still exist at the moment. We have been mandated by NEAR Foundation to grow the NEAR ecosystem in the region, and Blocksquare is based in Slovenia. We did our research, and I actually reached out to Denis with the potential if they would want to integrate on NEAR, because ultimately I saw that they were on Ethereum. NEAR is cheaper, it's faster, and it's more scalable. And I will leave it to Denis why they actually chose to.
Okay, sounds good.
Yeah.
Well, it was. It's maybe Sally doesn't know this, but it was actually a coincidence. You reached out because we were, always researching different alternatives to Ethereum as well. On the one hand, you have a potentially larger client that deals, hundreds of millions of real estate, and they're interested in tokenization, and they want you to answer, where is this, what's the infrastructure in the back. They want you to answer with maybe not necessarily Ethereum, but something that you can really advocate has been in the market for a long time. We were researching, on the other hand, for those clients that have much smaller real estate portfolios and then would want to enter tokenization. And there, the main question was not robustness, but basically fee costs, right? How much is this going to cost? Is there going to be too much burden in transaction fees on the secondary market? What's going to happen, right? So we wanted to basically see, or we were researching different alternatives to Ethereum. Currently, our main system is on Ethereum, like I said, but we started with this collaboration. We started building the first MVP on any other blockchain besides it. So it's the only other blockchain that we basically gonna utilize and expose our system to right now. And the beauty of it is that from a technology point of view, it's a real alternative within the blockchain ecosystem, right? So NEAR is being built really well. The whole ecosystem is growing. All the projects are kind of adopting it as well. So it's kind of what took years to be built over on one side, is now really growing fast on NEAR. And which means that if all those projects are going in that direction, this is probably the blockchain of choice as a hedge against Ethereum in a way, because there's always alternatives you need to have in place, and we believe that this is like the best on the market alternative to the state of the art currently, I would say.
Which parts of the ecosystem are reporting to NEAR? I heard about the token. What else?
So for the near kind of for the near future, so it's basically what we want to do is want to just port ultimately some of the real estate that we've tokenized so far. So we're about to reach 50 million worth of real estate in 13 different countries so far. And we want to port some of that value onto NEAR. So this is kind of the big milestone number one, I would say, that we need to reach here, right? And what we can do after that is much bigger as well. We can actually deploy the whole system on NEAR, which would mean to basically redo a lot of the smart contract system to be adapted for NEAR, to build up apps that you see that we are currently running just on Ethereum, we can do that on Near as well. So there's the option then on having two kind of parallel systems based on client needs in the end.
And you mentioned 13 countries that have real estate tokenized in them, right?
Exactly. Yeah.
13.
Yeah.
Okay. Can you just like list a few of them?
So we just recently tokenized the first apartment in Paris, in France. And then we have tokenized a hotel and some other properties, of course, in Dubai. Or the United Arab Emirates, let's say. So some apartments in Dubai, and we've tokenized a commercial building in Mauritius, for instance. Then, of course, we have the countries that are kind of within the Balkan region, so Slovenia, Croatia. We haven't done anything in Serbia yet.
Okay.
So Slovenia and Croatia for now. Then Austria, a couple of rental apartments in Vienna. We've tokenized 2 properties in Germany as well. And I think I probably
What
missed
about Australia? Because you guys, like, I always
yeah,
hear
of
that
course.
you got
And Australia. Yeah.
Australia,
And,
right? Also,
Julia's gonna be like, hey, we
yeah.
tokenized things in Australia. Yeah, and Australia as well, of course. Yes.
Yeah.
Yeah.
And yeah, I'm sorry just to interrupt you, Book. And one more thing, because this is like going into like the more practical use cases of tokenization. So I remember in one of our calls you mentioned to me that actually tokenizing an asset is your advantage is that you can do it quite cheaply. Can you again elaborate more on that?
So how costly something is how much time people need to spend on something, right? So if you look on the smart contract side, we just need to generate a smart contract and edit certain fields within it. That's on the tech side right now, which means it's very easy. And then usually when it comes to real estate tokenization, everybody's thinking of all the lawyers they need to hire and everything that needs to be done on the legal side. Well, what we've done is we've templated, the corporate resolution, which is the legal component of tokenizing real estate value, which means it's already there. And again, you just need to edit some fields on who is tokenizing it, and then do some signing of that resolution and link it to the smart contract. That's it. And that resolution is now in version 1.2. It's probably going to be iterated throughout time. Maybe in some jurisdictions, there's going to be additional clauses that are going to be added into that. In some others, they're not going to be there. It's now translated into several languages already, and so it's openly available on our website. If you click on the docs, you can access a sample of that resolution. And I think basically I can't stop anybody from using the same legal background to tokenize real estate on their own, but we can do it much faster.
Okay, and practically speaking, if I want to now tokenize my house, how much would that cost me? Not in time, but in actual money?
Yeah. So we currently charge for tokenization of a property, and that's something that we charge to our marketplace operators. It's $6,000, and that includes the whole package. So from
this is independent of the value of the property. So, for example, if I want to sell something through a notary public, usually there's these transfer costs that are according to the value of the property. In
Yeah,
that case, if
here we have
it's
it
a
like
flat rate,
because it's always the same process for us. Honestly, it's not related to the value at all. So for us, it's always the same process, and this is how much we charge. But we also have, for the partners that use this, we have discounts up to 100% actually on that cost based on how much BST they hold. And in this way, basically you can tokenize real estate at gas cost. And here then we come also to the part of tokenizing real estate on Near, which is then
even cheaper.
Almost,
yeah,
pennies.
Zero. Yeah.
Yes.
Yeah, pennies. Yeah, and
Exactly.
this is also in a way, it's, I mean, it's a strategy to attract high value real estate in this sense, because whatever it costs, the cost of actually tokenizing it is the same. It's a flat rate. So if condo costs 100K or 5 million, it's the same thing. The costs are 6K, from what I understand.
Exactly. Yeah. This is how we structured this to simplify it, and usually this is something that is utilized by our partners that run marketplaces. Yeah.
How do I actually go about buying a token of a tokenized real estate?
Okay. So to buy a token of a property, it's just like going to an NFT marketplace and buying an NFT. It's nothing really much different than this. The only difference I would say is the part that you need to KYC first. And that's basically it. Why? Because the issuer of the token is by law required to know who they are paying dividends to. Right. So that's basically the only difference. So you would go to one of our marketplace partners, log in, create an account there, register, go through the KYC process, add your wallet to your account, wait for it to be registered on the blockchain, and then after that you're basically good to go, and you can buy tokens from either in a token sale offering or on the secondary market.
And basically, owning a token of a real estate makes me eligible for revenue that is coming from that property.
Exactly. So the corporate resolution defines the amount of revenue that you receive in percentages of the revenue that is generated by the legal entity that tokenizes real estate from that real estate asset. So
what are some of the revenue streams?
Sorry?
What are some of the revenue streams coming from a property? They can rent it, they can sell it.
Let's take a very simple property. Let's take a very simple property. For instance, let's say we have a property worth around $1 million, generating 10% return on an annual basis. That would mean what, 100K per year. And let's say that the operator, the manager of that property is assessing that about 30% is costs. So you would be basically in that resolution, 70% of the revenues would be distributed to token holders. Now, on the other side, the capital stack, it might be 10% of the property is tokenized. So let's say you own 1%, so a tenth of that, which is tokenized. You would basically be receiving 1% per year of the 70% of all the revenues, which would be 1% of 70K in this case. Yeah. And you receive that as a stable coin to your wallet.
And Denis, what do you think about projects such as Terra's Anchor? That was a total Ponzi scheme when it comes, like a Ponzi project when it comes to this real estate tokenization, the high yields. that allured users? Do you think this is something that has backfired on you guys?
Well, if you're referring to the Terra Luna kind of situation,
the anchor, there was an anchor project on Terra that's
yeah. Well,
that was also about real estate tokenization, but it turned out to be a Ponzi.
was it really?
I mean,
Yeah. Maybe. I mean, I think the situation with Terra Luna was different. Why things collapsed.
Yeah.
But yeah, I think that this is like the worst thing that happening to Web3 in general. It's like scammers using it for the reasons of that we're not here for today in this call. So you can't protect, I would say, from happening, unfortunately. However, what we've built at Blocksquare is, even though it's on permissioned networks, we build it in a permission way. So it's permissionless networks, but the system is permissioned. There's a smart contract that just takes care of administrative access rights on different levels and different users. And a marketplace operator needs to be KYC, it needs to be identified before it is allowed to utilize the system. So it creates some centralization at the, I would say, at the benefit or for KYB and basically accountability. So here we're dealing with real world assets, and it means that whoever is tokenizing real estate, offering these investments to investors, needs to be accountable for and verified. So, yeah.
Denis?
Yeah.
What determines the value of real estate and its projected APY?
No, that's a good question. What does determine value?
How is determined in the first place?
I mean, is it as the real life case, or do you guys have specific standards and metrics that you use?
So within the resolution, we have the standard who needs to create the valuation. So you have international valuer standards that are applied. And we have within the valuation of a property, there's always a valuer's report attached to it. Now, even though you can have different valuations on the same property, anybody in real estate knows that that's true. If you go for a loan at the bank will order a valuation, and probably that is going to be much lower than the one that an asset owner would receive. So, and this can differ by 10-15% depending on the market and asset type. So what we see is that tokenization can actually create a new valuation layer next to this one. So imagine you have one property. The real world value determined by the valuer is 1 million. Now, 10% of that property is tokenized and is traded on a weekly basis on the secondary market. People buy and sell it. So there's price points on that 10%, and based on the volume of that trade, they're more or less important. Now, you can, in a way, use those valuations, kind of crowd-funded or no, crowd-sourced valuations, to determine the value of the whole asset if it would be tokenized in full. Right?
Okay.
So it creates also a new layer, tokenization, on top of the existing layer. And this is maybe not really, doesn't make any sense on an apartment, but if you use this on a unique property, like how much is the Eiffel Tower valued? What's the value of the Eiffel Tower? What's the value of the, I don't know, of the Colosseum? What's the value of, I don't know, a football
Burj
stadium?
Khalifa. Yeah.
Burj Khalifa.
Doro.
Yeah. So you
Yeah.
have certain properties that are really hard to value, and this might be just maybe one of the only ways of how you can actually determine the real value of these assets.
So the tokens can be traded among
Yeah.
investors. Are they trading at a fixed price, or can the price of the token go up?
How we model this is, I mean, basically it's modeled based on the interface where they are traded. But in its essence, those tokens are traded based on supply and demand.
Okay.
Yeah.
But that can somehow jeopardize the value of the properties also.
I was thinking about that. For example, I tokenized my apartment and I have pumped all of my liquidity into token, and the token is worth more than the actual apartment.
It could be.
But would it make sense?
Would it make sense for somebody to buy it at that valuation, right?
Yeah, probably not.
Probably not, right? Because there's the real estate kind of acts as the, so we have something we call the liquidity premium. And it's something very, I would say it's not well researched, and it's definitely not well discovered yet. And we don't know, we only determine pricing of real estate assets based on current supply and demand. So your apartment, the value of it depends on how many similar apartments have been bought and sold during the last year, 2, 3. That's how they create valuation in very simple terms. And here what we're doing is we're just making your apartment tiny in a way that anybody can buy a portion of it, right? And so you can create many more price points through which you can determine pricing and value. That's all there is. It's not. So how much is the liquidity premium here? Because let's say your apartment is now really liquid because there's not, I don't know, 10 people who might buy it in the next 5 years, but there's thousands of people who can buy it tomorrow.
Okay.
And that's what the liquidity premium is about.
I have another question. Let's say I want to invest and there is a real estate listed on the website. Am I investing in something that is already built, or can I invest into projects that are about to be built and maybe need funding?
That's a good preference, or a good overview of how our infrastructure can be used. Because yes, we are tokenizing real estate for the purpose of building Ocean Point, etc., and that's one thing. But ultimately, we offer infrastructure for marketplaces to be formed, and these operators see opportunities in different sectors, from new development projects to tokenizing established assets, and so both of those. But we can go even further. You can say tokenization can be used by a real estate developer that is doing multi-residential, and they are upselling their clients. So basically what they say is, okay, I'm building a 100-unit property, but you know what? I'm not going to sell all the units the same way. I'm going to instead tokenize 20 units for rental. And whoever buys an apartment is going to be also getting some tokens in those 20 units. For instance.
Okay, sweet.
And this, we've proven that this shortens the sales cycle for the developer and cuts marketing costs down for them drastically as well, because they can now sell the whole property probably in 3 to 4 months instead of 12 to 16 months. Then you have maybe a big trophy asset, like a big 200 million, 300 million shopping mall in a jurisdiction that's a bit strange, like South Africa. You don't have many funds who would buy it. And what that company wanted to do is tokenize 20%, 10% at 200 million valuation, and sold batches through auctions to local investors who have 1 to 3 million ticket sizes. And that would be a way for them to basically exit at the desired valuation. Then you might be just a rental. So, and rent to own models can be deployed on our infrastructure. So you have an app, you're renting a flat, and you sign an agreement with the landlord to pay on top of your rent every month, whatever you can. And whatever goes over that monthly rental fee is automatically converted into equity through purchase of tokens. So there's a lot of business models that can be developed on the same principles.
What happens when a business model fails? What are some of the risks? Let's say I want to invest in real estate, I get a token, and the business model fails. Maybe the house doesn't rent, or it gets destroyed. That is also failing a business model. Can I always sell my tokens back?
So investing is risky, yes.
Okay.
You can make money and you can lose money. Yeah. So if you put risk on tokenized real estate, it's less risky than cryptos and tokens. I would say it's less risky than NFTs. It's less risky than bonds, not bonds, but stocks. But it's much more risky than bonds, of course. It's more risky than a real estate investment trust, or and it's in a way might be more risky than directly investing in real estate. So me investing money into a property. However, you have the ability to diversify, to mitigate those risks that you mentioned. A house might fail, a rental market might fail. Imagine having a portfolio of hotels just before Corona. Everything was great. And then all of a sudden, you have a big problem in hand. You need to survive that period. So there's always different appetites for risk, and tokenized real estate is more about access and then mitigation of risk through choice, through diversification. I also don't see people putting larger amounts of their net worth into tokenized real estate right now. That's why we see so slow movements in that field. But at the same time, I also see a whole generation that just wants to hold wealth in wallets.
Yeah. So Denis, when you actually combine Blocksquare with Ocean Point, what do you think about the concept of reversed mortgages? Have you explored this part, this use case for DeFi and tokenized real estate to create reversed mortgages? I don't know if it's an existent thing already or.
Yeah, that's in a way why we went in the direction of creating Ocean Point. And it's basically the main reason is we see in DeFi, we see cryptos being used as collateral.
Yeah.
Which is, it's great, especially in bear markets. It's a great tool.
Yeah.
And what we see on the other hand side is real estate being available through tokenization. Now, systems like MakerDAO, for instance, they work because there's a very efficient market to liquidate collateral. With tokenized real estate, if I tokenize 10% of my flat and I use it as collateral, there's going to be a big discount whoever is buying it if my loan fails. Now, if instead there's a basket of real estate assets behind the token, and that token is aggregating that value, and that token itself is used as collateral, it's the token is much more liquid. So in a way, it enables this type of situation that you mentioned, where you can use tokenized real estate value to basically originate a loan and for the end user to actually receive it.
We kept mentioning Ocean Point through this conversation, but what's actually Ocean Point? Can you introduce us to it?
Okay, sure. So Ocean Point is a DeFi protocol that we're building, and is designed to be like a market maker, have a market maker function to all tokenized real estate on Blocksquare. So providing secondary market liquidity to small cap tokens, right? Because that's what tokenized real estate is. And it acts as a fund of funds for the ecosystem. On the other hand side, it creates a wrapper around the value that it holds, so that basically liquidity can be achieved, so that lending, real estate, tokenized real estate lending can be achieved, and all of those use cases that come with DeFi. It's a bit to dig into as such, but let's say if I just kind of zoom out, with Ocean Point, what we want to achieve is what, and this might sound a bit, crazy, but what we want to achieve is what MakerDAO achieved for crypto collateral lending. We want to with Ocean Point for tokenized real estate.
For example, if I opt in for Spring, Delta, Tide, and Wave, is it that similar to having my own Ocean Point, just for my own token?
Not really, but it's like you having a marketplace similar to Realty, for instance. It's a project in the US, I think. They have a marketplace where people can buy and sell tokenized real estate. You can have that in 2 weeks.
We have a question coming from Philip on LinkedIn. So let's say I have a real estate, I have tokenized it. Can I sell it? What is the legal process? Sell it or transfer it to somebody?
Okay. So here, what we're talking about is legal title to be in the hands of a company. Many times real estate is structured like this already, especially when it comes to investment property. And the tokenization part is giving access to this investment property through the purchase of tokens. So the actual transfer of title is not facilitated here through tokenization, but the access to the economic rights that derive from the ownership is. I'm not sure if this exactly answers the question, but I hope it does.
Okay. So we went through a bunch of stuff, and guys, you can ask questions on LinkedIn, on YouTube. Just drop a comment, it will show up here, we will read it. Technical wise, I think we're okay. I have a question for you, Denis. Are you satisfied with the direction you're taking on a personal level?
Well, I think I am. I'm a person that enjoys the journey, and I tend to focus on the today and not the tomorrow. And so, yes, I'm very satisfied where we are.
Okay, great. So, Sally, what are your expectations out of this?
Well, our expectations is basically to bring tokenized real estate on here, which is, I mean, as straightforward as that. It's a nice use case, and basically to enrich further the ecosystem. As simple and as straightforward as that. I have to start the light in the room, which is on the other side. So I'm gonna move just for a second and come back because it's getting too dark here.
So, guys, drop in any questions you have. We are about to wrap this up. Also, let me mention about Hooked again. We have designed a special NFT for the Blocksquare community. Hop on near Balkans Discord. We will help you mint. Then you go back to Blocksquare Discord and you will get unique roles for connecting your wallet. And Hooked will probably play on utility in the future.
Maybe, Sally, maybe because we're part of this grant program, maybe you can tell us a bit more about the grant program on Near, because I think it's a great initiative, especially in our region. People need to know about it more, I guess.
Exactly. Well, I was actually waiting on Vuk to ask me this question, but
okay.
but then. But yeah, I mean, in general, we've been mandated by NEAR to grow the NEAR ecosystem specifically in the region, and we've been doing that in several ways. One of the quite straightforward ways is by giving out grants to projects that would either want to start developing on NEAR or existing projects such as yours that would want to actually integrate with NEAR. These are fast grants. The fast grants are actually up to $50K dollars, but we also do provide follow-up grants. Once the project has launched successfully, the KPIs have been successfully fulfilled, we can actually do also follow-up grants. And I mean, Dennis, it's up to you to actually, as a first-hand receiver of the grant, to tell us about the process. Was it fast? Was it easy? And so on.
How fast is fast?
As fast as
I mean,
gets.
and we are in a bear market, so.
But all in all, I think the team that of Near Balkans is doing a great job. So that's for sure. That's one thing. I mean, you found us. No, jokes aside, we will be finding you as well probably. But you do your job. You basically are able to you go through probably many projects, and I think it's a great opportunity right now because who's building in bear markets is usually the real
yeah,
people.
the real deal. Yeah.
Those for real, right?
Yeah.
And everybody else is just away. So it creates a great filter. It makes things easier for the Near Balkans team to sift through the various submissions. And don't be shy. I mean, just go for it. And if you are short on an application, they'll help you out, tell you what you need to do next, where things are lacking or missing, and help you through the process. So just basically get in touch with them if you're planning to build something on Near. That's from my end so far. And I think
you have it all covered. Yeah.
I think we have one question here.
NFT collectibles in real estate. Do you think that they will be implemented? How? When?
I think it's a broad question.
I mean,
right?
they have been implemented already. If we take the case with the February, there was, I think, February of this year, there was by Propi, they sold actually some kind of house in Florida for around 600K. And they actually auctioned it in the form of an NFT. Where the deed, I mean, the legal rights of the property would be on the NFT.
Okay.
Yeah. So we are going in that direction, but again, it depends.
Yeah, I think NFTs right now, the beauty of NFTs is that it attracted so many artists around Web3. So now I think the Web3 space will never be the same again because of it. because so many people joined the movement in a way, in general. And we have so many designers interested in the space that just joined through that NFT craze that was driving the initial bull run of 2020 was it? Is it?
Yeah, 2020.
Yeah. All right. It's like it's a very good.
I mean, it's a nice use case. I mean, specifically with the real estate, because in that way, the NFT was actually signifying the ownership on chain. I mean, this is their argument. But with tokenized real estate, we take it a step further. I mean, this is my personal opinion when it comes to DeFi, because aside from the actual accessibility, I mean, tokenizing it and with DeFi gives it this liquidity, which goes beyond just the NFT being there.
Yeah.
So it's been an hour.
Yeah.
This was a nice introductory call. Thank you for joining. We can wrap it up now. This live stream will be available on Blocksquare and near Balkans channels. We will drop a link and we will be in touch. That's it.
All right. Thank you, everybody.
Thank you, and we'll probably have a second AMA once the actual integration is complete, where we can actually go into more details about what has been integrated, what has been ported, the properties, and so on.
Exactly.
Perfect. Take care, guys. Ciao.
Okay. Thank you. Bye-bye.